Welcome back. I'm Pierre Daly, Managing Editor at AdvisorAnalyst.com, and this is Insight is Capital. We're thrilled today to have with us a luminary in the world of investment management, Terry Dimock, Chief Risk and Execution Officer at National Bank Investments. In his pivotal role at National Bank Investments, Terry oversees asset allocation and portfolio manager selection for a diverse suite of investment products, including mutual funds, exchange-traded funds, and managed solutions. Before his tenure at National Bank Investments, Terry made significant contributions at the Caisse de dépôt et placement du Québec as the portfolio manager and head of investments for sectors encompassing technology, health, and consumption. And tracing back to the start of his illustrious career, he was a portfolio manager at Standard Life. Terry is a proud alumnus of McGill University with a BA in Commerce and an MBA. He's been a distinguished CFA charter holder since 1998. Today, Terry's sharing his views on risk management in volatile markets, the emergence of new asset classes, responsible investing, due diligence and accountability, and the future of portfolio management.
This is the Insight is Capital podcast.
The views and opinions expressed in this broadcast are those of the individual guests and do not necessarily reflect the official policy or position of AdvisorAnalyst.com or of our guests. This broadcast is meant to be for informational purposes only. Nothing discussed in this broadcast is intended to be considered as advice.
Terry, welcome, and thank you so much for honoring us with coming on the show today.
Thank you very much, Pierre. Really happy to be here to have this chat on topics I'm really passionate about. Hearing my history, I can't stress enough how it's a team approach when you do investing. And I've been lucky enough over my career to be surrounded by really brilliant people. And usually that's how, it starts in investing, is having the right people. Absolutely.
Terry, having said that, before we get started, tell us about the arc of your career. I know I went over it in brief, but tell us about the arc of your career, how you evolved in the business, and what you're working on these days at National Bank Investments.
Well, I started off as a investment analyst in equities, really looking at fundamental analysis, how you look at a stock, how you value a stock, and if it's a good investment or not. And Standard Life was a really good school. Really, what they thought they brought to me was process, and that's something that stuck with me across my career. You can't predict the outcome. What you control is the process, how you do things. And if you do it in a disciplined manner, using approaches that have been shown to work, usually the outcome over time is quite positive. And I've seen that at Standard Life. I've seen that at the Caisse de dépôt. And in my career here with my colleagues, we've tried to implement really solid processes. What I'm working today is, one, ensuring that our process is intact and that we're continuously looking to improve it, not change it. A good process usually you don't change or overhaul overnight or on a constant basis, but you do look to add to it. I'm also looking at how new technologies like AI and other approaches to looking at data will influence what we're doing, will complement what we're doing, and that's an area that I think is going to bring profound change in the next few years and decades.
Yeah, you can't stress enough how important process is. It really helps to eliminate the behavioral obstacles that occur. You follow the rules and you eliminate that, all the biases that we're prone to as human beings. In your work at National Bank Investments, you have created something called open architecture, the open architecture framework, OP4+, which helps in managing risks, especially when markets are experiencing increased spikes in volatility. Can you talk about that?
Well, in 2012, National Bank made a pretty bold move, a bold decision by deciding to sell its asset manager. And that was pretty unique. We had good portfolio managers. It was a good team, but we felt for us to be able to serve our clients, give them the best portfolio managers in the world, we have to operate in an open architecture. And that means not having your own portfolio managers, but going out in the world and finding the best people, the best teams to really manage every single asset class. And then we bring those PMs together in our solutions, fund of funds, with the work of our CIO, Martin Lefebvre, and my colleague on the product team, Joe Nackley. The three of us, supported by an extraordinary team, build solutions using these best managers in the world. And OP4 Plus for us was really an approach to define what are we looking for in a portfolio manager. So it's an acronym, OP4 Plus. The O is for organization. We're really looking to partner with the best firms in the world that have all of the infrastructure, all of the surrounding team to support the portfolio managers, around risk, compliance, trading. We want to make sure that it's a solid firm on a solid footing that will be around for decades to come. And then there's a series of Ps. There are 4 Ps. Starts with people. We want to be partnering with teams of portfolio managers and analysts that really have a very long history together, low turnover or no turnover, are diversified in thought. So not having PMs in teams that are all from the same school, all from the same geography, but really, a diverse group of individuals that will bring, foster better discussions, better challenging, and make better investment decisions. The second P is really process. And we talked about process earlier in the conversation. We're looking for a very clear investment process in every single asset class. How have they created value in the past? What's the approach? What are the guardrails? How do they implement it? How do they make sure that they remain true to that process? And that's something that we spend a lot of time on, and something we'll discuss later on how we actually follow up. But that is the key, the people and the process. And that's what, we're really looking for. So the first 3 pillars in the OP4 Plus are really what we're spending a lot of time when we actually bring in a PM or analyze a PM: organization, people, and process. Then you start looking at areas on how we actually monitor them, look at them. Portfolio for us is the next P. Is we actually have the positions of every single portfolio on a daily basis. And there we're trying to look at, are they buying securities that are consistent with the process? Are they trading in an abnormal type of frequency? Are they taking risks that they don't normally take in the portfolio? And that for us will be a testament that the process is actually being followed. So usually that's one of the areas where we can see glitches in the processes when we start buying securities that really don't fit the process that, we've come to know in that particular PM. Then there's performance, and, we don't buy performance. Performance is a result of having, the right process, the right approach, but we analyze performance. Is it consistent with the style of the PM, where we are in the market and the economy? And is it delivering the results that we're expecting? Every PM will underperform for short periods of time, and usually that's tied with their process. But if they're underperforming because they're actually not doing good security selection, they're buying securities that don't fit their approach or their process, then that's where we start questioning. We start digging into it and see if we're still confident that this team, these group of individuals can still deliver performance for our clients. And then the last one in the acronym is the plus, which we added in 2018, is ESG integration. We added ESG integration because we believe in it. We think it's an area that portfolio managers and analysts have to dig into to really find opportunities and also find risks that may, each individual company or security may have because of changing environment or social policies or just bad governance. So for us, it adds to the traditional financial analysis that, I started with in my career at Standard Life, having done the CFA program. But ESG has been complementing that approach, and I think it leads to better outcomes for our clients.
I think it's really an under-recognized, I going back in my own career, it seems to me like the portfolio manager selection process was always important, but it's different when you at your expertise level and your level of management are able to actually make the correct types of, or effective types of evaluations of your portfolio manager selection. Like the capital allocator selection is actually an under-recognized risk. And, so thank you for elaborating on the, the design of OP4 Plus and what it actually means to advisors. I think when you can take the responsibility of manager selection out of the picture for the advisor, that manager selection risk, reducing that manager selection risk for the advisor is very beneficial. And it's hard to quantify. I'm sure at your end you can quantify it, but for the advisor and for the end client, for the end investor, it's extremely hard to make an evaluation without the level of data and information that you have at your disposal. And it's also under-recognized, Terry, that you and your team are doing this all day long. Advisors, on the other hand, have many other responsibilities to their practice, to their clients. The end investor, their clients, also have their own priorities each day. It's not their job. And I think that's an under-recognized quality of what, of your work at National Bank Investments, which is to stay on top of these developments within the stable of portfolio managers that you oversee. Terry, how does the ongoing due diligence and accountability features of OP4 Plus provide an edge in adjusting a portfolio based on a macro view?
I find it's, kind of related to selecting stocks. When you analyze a stock, you're looking for a good company with a good product that can have consistent, sales growth and margins and have a, pristine balance sheet and grow over time. And I think, when you look at it, there are two main reasons why we would, change a portfolio manager. And one would be just no longer meeting our OP4 Plus criteria. And that, we spend a lot of time on. And, every time there's a breach of one of the pillars, we do a new OP4 Plus report. But, you're talking about macro view. And with our CIO office, Martin Lefebvre and his team, they build long-term market expectations. Every year we review what are the expectations for the next 5 years, the volatility that is expected in every single asset class, and what are the different portfolios, different asset classes we want to put together to build a diversified solution, like a 60-40 portfolio, depending on the risk profile of the client. So that work is really done, a lot of teamwork with the CIO office to make sure that what they're identifying as asset classes and what they want in the portfolio, we have the right portfolio managers to answer that, those needs, those requirements. So it may happen that in a year, certain asset classes we would be underrepresented in geography or in a style. And then that could lead to selecting another new asset manager or a portfolio manager. And then that would lead to a new search using the OP4 Plus criteria. So again, being in an open architecture, that gives us a lot of flexibility to add an asset class or to add a portfolio manager, which will diversify away from a style. Let's say we all have quality growth type managers and we want a value manager. Well, we can go out, do a search and add a portfolio manager into our list of PMs that we put to build a solution. So I think for us, the OP4 Plus approach and the open architecture really is, gives us all the flexibility in the world to continuously build the best, diversified portfolios for our clients.
With the advent of new asset classes like alternatives, liquid alts, private credit, private equity assets, CTAs, and cryptocurrency, how does the OP4 Plus model adapt or integrate these into portfolio management
OP4 Plus is an approach. So it's very flexible on looking at different asset classes. And, our whole portfolio management team that builds our solutions, as I mentioned earlier, the CIO office, our team that manages selection OP4 Plus, and our products team, we meet together, on a regular basis to look at, do we have the right portfolios, portfolio managers, asset classes, the work I spoke about earlier on long-term market expectations. So over the past few years, that brought us to add new asset classes for clients that could tolerate less liquid assets in their portfolio. Usually these are more high net worth individuals that can have part of their portfolio in a less liquid asset, don't need those assets in the short term, because private equity, private real asset, private credit usually have lockup periods that are much longer, 5 to 10 years. So you need a client with a portfolio that can tolerate that type of liquidity risk or reduce liquidity. But then, working again through our process, and this time on privates, we've partnered with our pension fund team, the pension fund of National Bank, because they had expertise in private investments. And we're, always looking to, who are the best people to recommend different types of portfolio managers. And we felt that they had a long track record of, 10 plus years of looking at these more complex type of vehicle, that are a lot less liquid. And once you invest, you're invested for, as I said, 5 to 10 years. So the work that goes into it, understanding it, making sure that we're with the right portfolio manager, we're paying the right fees, which is very expensive to invest in these type of private vehicles. But they use the same approach, very similar to P4 Plus, looking at all the characteristics, making sure that they're selecting the right portfolio managers, the right vehicles, the right structures that will fit in that part of the less liquid sleeve of our portfolio for our high net worth clients. And in portfolio construction, it is, part of a sleeve that is less liquid, as I said, but we want to make sure it adds to diversification. You can't, adding an asset class in a less liquid area doesn't mean you're improving diversification. So our portfolio construction committee goes through the analysis of every single fund and asset class we want to add to make sure that it is bringing the characteristics we're looking for in a diversified portfolio.
Interesting. Terry, can you elaborate on how the cycle of monitoring the organization, people, and process assists in safely navigating these new investment avenues?
Absolutely. And that, spend a lot of time in the beginning selecting a new portfolio manager, but the real work happens when they're actually managing the money. We're trusting them with really large mandates of our clients' investments. So we want to make sure that we're verifying, monitoring along the way on a very consistent basis. So we have, a very thorough due diligence process that we really look at on a monthly, quarterly, and yearly basis. So on a monthly basis, even if I said performance is not important, we look at performance to understand, are they outperforming or underperforming for the right reasons? Or are they taking, risk that is abnormal or owning securities that are don't fit the process? Significant outperformance, while good, can be an example of taking too much risk, which could lead to underperformance later on. So we really look at for abnormalities, inconsistencies in the process, and we do every single portfolio every month. We go through the list, and if we need to follow up with the PM, we'll have a call, or if it's serious enough, we'll have an on-site visit. On a quarterly basis, we really do the complete performance attribution, and we have a call with every single portfolio manager that we have on our roster to really go through, their explanation of their performance, and to confirm that, all of the pillars of the OP4 Plus process are still intact. So that work is something that, every 2 weeks at the beginning of a new quarter, the team is on calls with a lot of different PMs across the world to make sure that we're still comfortable, or are there areas of research or follow-up that we need to do to make sure that they're fulfilling the mandate that we gave to them. And then there are, yearly on-site visits. Yes, in the world of virtual and Teams meetings, we've learned to do it by video, but sitting in front of someone face-to-face, going through what they're doing, asking them questions, even sharing a meal, you want to really understand how they're thinking, how they're how disciplined they really are, what they're really doing. It gives you insight if, you feel you can trust them, that the answers they're giving you are accurate, or are they spinning a little bit, or adding a little bit of a marketing explanation to something that, needs a little more detailed and accurate information. So a lot of work on that. And my team is really focused on that. Every time we see something that is abnormal, if a pillar is broken, we have to do a new OP4 Plus report. And the OP4 Plus report is updated every single year and is presented to a committee. And so they can question us. They can, challenge us on, well, I'm hearing this on this this PM. Have you looked at this? What are the concerns? I find this performance is abnormal. Can you explain it to me? Why is it, why are they underperforming in this particular quarter when I expected that they would be outperforming? All that work is, making sure that we're held accountable in doing the work, the diligence, and making sure that we're delivering for our clients.
It's checks and balances. I mean, it's very, very interesting. I mean, like your point was very interesting. I think ordinarily, an investor would see a spike in performance on their, holdings and say, oh, this is wonderful. But as you said, it points out that abnormality highlights a departure potentially from a strategy. And that could be, it's a red flag potentially. Just because, someone is winning in the market doesn't mean, they're doing it responsibly. I think that's something that could easily be underestimated. Somebody, a manager could have a great run for a year, and then the following year you discover that they were completely overexposed to a particular sector or stock or holding that makes you scratch your head and say, how can we, how could we have missed this? Acting on behalf of everyday investors and advisors in that regard is extremely beneficial. You mentioned ESG. Could you talk about the added value of integrating ESG criteria into portfolio management? How does OP4 Plus facilitate this?
So, for the beginning part doing this process, it was OP4. And we decided to add the plus in 2018 because we continue to challenge ourselves to, are we doing everything that we can to select the best managers? And we felt that integrating ESG is in addition to good financial analysis, traditional investing. And that's why we added it, because we felt it would improve risk-adjusted returns. We didn't do it because we felt, it was value-based but we felt it could improve our investment decisions. And on top of it, it can be good for the planet. I'll give you an example of a company that was in the S&P 500 in 2018, Pacific Gas and Electric, PG&E. Company that, well-regarded. To be in the S&P 500, you have to be one of the biggest companies in the world. They manage the electric grid in California. And some of the good portfolio management teams that had ESG started noticing lack of governance in how they manage their grid and how they cut down trees, and the lack of investment in that area, and started feeling there may be an environmental risk. When you identify a risk, you want to make sure that, you're talking to the management team of the particular company you're investing in and making sure that they're looking at addressing those risks. Well, what happened? We had forest fires in 2019, significant lawsuits where PG&E was held accountable for bad management of their electric grid, and they had to, file for Chapter 11 bankruptcy. They restructured. They were held liable because, analysts and PMs who had ESG criteria, they identified it as a risk. They never could predict there would be a big fire, but they reduced or eliminated that position because they felt the risk is too high and their environmental management is bad, and they don't have the right governance to manage this. And it's an example. And I think this added layer of analysis is just logical. If people aren't doing this, why are they not seeing certain risks that could be bad for the asset they're investing in, and could it, detract from value or lead to a negative outcome? And that's why we added it. And we do a lot of work on understanding that pillar as well. How they're investing in it, and are they really serious about it? Because, you've heard the term greenwashing. The last thing we want to do is say that we have a PM that integrates this and then verify afterwards that they're not really doing it. They're getting an ICSG report from one of their teams, but they're not integrating it in their decision-making process. So for us, it's as important as all the other pillars. It adds value, reduces risk, and that's why we added it, and that's why we feel we continue looking at this and looking for firms that are the best at this, on top of being good financial analysts or investors.
There's a lot of skepticism and, surrounding ESG, but I think if you actually strip out the political and the idealistic view on ESG, there remains a logic to ESG, and there remains an opportunity in ESG, which stems from the political process, such as the Inflation Reduction Act, but identifying companies that are either that are governing themselves responsibly and taking measures and updating infrastructure and making sure that they're on the right side of safety concerns, environmental concerns, as well as the S and the G parts. There's an opportunity in risk management on the side of the logical side of ESG. And then when you look at something like the Inflation Reduction Act, where there's, potentially trillions of dollars flowing into this movement and this movement to energy transition, for example, there are also some incredible investment opportunities for as long as that lasts. And so I think when people get caught up in the arguments and the politicized part and the idealized part of ESG, you get a lot of polarization. But when you actually strip that away and you look at the logic of it and the opportunity of it, there are some significant and very important tailwinds to ESG.
Well, we don't believe that we should exclude energy completely. There's going to be a transition, and we all use energy today, and some of us have started buying electric vehicles, but we're still very dependent on fossil fuels. But what we believe is we want to be invested in companies that are doing the right thing to transition, evolve, make sure that all their employees will have a job in, renewable energy later down the line, and not be stuck with stranded assets that will not be useful anymore. And I think it's just good practice to look at your business, if you're an energy producer, and say, well, what's going to happen in 5 years, 10 years, 15 years? And am I taking the right steps to ensure the viability, the sustainability of my business? And I think the politicians, some of them have made it very personal, trying to scare people and thinking we're trying to take away their jobs, which is actually the opposite. We're trying to make sure companies are doing the right thing to keep those jobs, improve those jobs, and make sure that, the skills that people had in exploration and production can be transferred to renewable energy in the future. And, I think, unfortunately, some of the politicians have made it personal, but I think from a logical point of view and investment point of view, it's the best outcome for everyone to look at transition and to make sure that hold the companies accountable to move in the right direction.
Are there specific performance metrics that you look at to gauge the effectiveness of ESG investments within the OP4 Plus framework?
Well, again, and I'm repeating myself, we start with process. What are you really doing as an investor? Is it credible? And are you putting the resources required to really be using ESG to benefit your decision process? One of the areas to show how serious you are is to be a signatory of the United Nations Principles for Responsible Investment. We became a signatory in 2019, and I can easily say that it made us a better group, a better team, a better approach to selecting your portfolio managers, because you're held accountable in your reporting of what you're doing, how you're doing it. And then we really go, in the process. How are you using ESG factors to create value and manage risk? We want proof points. You'll show us why you sold the security because of ESG factors, or why, you're concerned about a certain stock or a certain security, why you added a company because they're in the right transition area and they're going to, create a lot of value over time because they have this technology or this approach that is, very avant-garde. All that, we want to make sure it's real. They're really incorporating it, doing it the right way. How many people are actually dedicated to responsible investing? If you're a group of 50 investors and one person in ESG, well, I don't know. I think it probably not very credible. Or are the 50 educating themselves, making sure that they have the right knowledge to implement this? Along with ESG comes, being a responsible investor. So are they voting their proxies accordingly? Are they engaging with companies to make sure that they're looking at the right risk factors, the right opportunities to continue delivering value? Are they looking at their portfolio footprints, on carbon, on water? Do they have real targets on diversity? All things that we think are important, not because they're the right thing, because they're actually going to deliver value or reduce risk. And then stewardship, how are they looking at their overall role as an investor? I think it's important. I think it also adds value over time, and it adds credibility. So all these things we're looking for, we're questioning, we're making sure that they have it incorporated in their culture, their approach. And I think it just makes for a better portfolio management team, a better firm to actually do this with credibility.
It makes for a very busy day.
Yeah, well, we have really passionate people that really enjoy this. They really want to deliver for our clients. And, they know that the process is what we control, and they work on it day in, day out. Honestly, the culture we have at NBI, best culture I've had in my career. People are really focused on delivering for our clients, and it makes go by very quickly and is very fun. So, also having the right culture and what we're doing is important, and holding ourselves accountable to our process as well. And we've been fortunate enough to attract really good talent.
Well, I think if people are tap dancing into work, you can't ask for more than that. How does National Bank Investments' open architecture framework ensure full accountability, especially when it comes to evaluating and selecting external sub-advisors?
Well, we have our own key performance indicators as well. Are we selecting portfolio managers that are actually delivering over 1, 3, and 5 year time periods? Are the OP4 plus criteria being followed? And if not, why are we waiting to change them? So we're held accountable on a regular basis, and we actually calculate, how many are actually beating. And here we're looking at active managers. So our KPI is actually comparing them to an ETF, an investable comparison, that is in the same passive asset class. So we would, compare a Canadian equity manager in F class to the ETF that replicates the Canadian index, to make sure that we put ourselves in the shoes of our investors. Well, I'm selecting this manager that is an active manager that's supposed to deliver value and has to deliver value above fees. If not, I should just buy the passive ETF. And So we're making sure we're holding ourselves accountable to that metric because we want to be doing this to add value to our customers, not just to sell mutual funds. And that metric, we've done quite well on, but it's, as I said before, is we never get too excited when, we're beating that metric by a lot. We don't get too concerned if we're a little behind on the metric. What we work on is the process, and over time, it's delivered quite well for our clients.
Some of the evaluation methods that are considered important at the layperson's level, like, did the active fund beat the index, is far too simplistic and misunderstood. From what I gather, like from what you're saying, it's obviously very important to you to either have to either outperform if you can, where you can, with the same amount of risk as the index or less, or to at least do as well as the index, but with less risk. And again, the risk-adjusted return statement gets used a lot to describe the process, but it's also under-regarded. Can you give an example of where OP4 Plus has been instrumental in identifying a gap or an opportunity, thanks to your focus on due diligence?
Usually you will find gaps in process and portfolio not being aligned, or people, with departures or changes or not having the right diversity. We have identified in the past PMs where they started adding, it was a Canadian equity portfolio that was supposed to be, very high quality companies, moats or barriers to entry to their businesses and pristine balance sheets that would deliver, good compounding over time. And at some point, they started adding mid-cap size energy companies that were very levered. And, we were concerned. So we went to meet the portfolio manager, find, why are you buying these? And what's your thesis? And why does it fit your process? And that PM didn't have a lot of answers to give us that made us feel comfortable. Buying them because they were cheap. Well, that's luck. It's not a process, and it's not the process you told us you would be following. And we actually changed that PM a short time later because we had lost confidence that they could deliver on the process they told us they were following. And, often PMs, the ones that get into trouble, had a period of underperformance. If they start tinkering with their process, hoping to catch up performance, well, that leads to bad outcomes most of the time. And it becomes based on luck and not based on the process. Same thing with people. We're investing with a team that is, a portfolio manager, one or two good analysts behind those people, and a very robust approach, and they're aligned to the portfolio management process and the outcomes of the portfolio. And every time you get a departure, you have to question, is the team still able to deliver? If you look at a sports analogy, I have a hockey team and my star player, the one who scores all the goals, is injured. Well, can they still deliver? And, that's a question that we need to ask ourselves. So every time someone departs, we do a new OP4 Plus analysis and try to make sure, are you able to deliver? And if we're not comfortable that they can still deliver, we will change that portfolio manager.
Well, it's critical, right? I mean, it's critical because if you stop and consider that, every single individual, especially, particularly in this profession, has career risk attached to them. That when they become more worried about career risk than process, there's definitely a tendency to, where you could see style drift happening or out of bounds decisions occurring in their portfolios in order, to play maybe, catch up against their career risk. And that's potentially dangerous. And if you're not able to identify it in the ways that you and your team are able to, through your process, then you're potentially putting yourself at great risk to somebody's personal biases or problems and or affirms interpersonal biases and problems. Terry, what trends or challenges do you foresee in portfolio management, and how is your open architecture, the OP4 Plus model, positioned to address these?
Well, let's start with one thing: what is not going to change, and what's not going to change is having a well-defined, disciplined process and having passionate people to execute that process. And what we're looking for in a portfolio management team is what we're looking for in benchmarking ourselves. We do in the open architecture and OP4 Plus process. So that's not going to change. But what is evolving very quickly is the tools and the data that we have to analyze portfolios and portfolio construction. So data transparency is improving. We're getting more data on ESG, but still, need more and more consistency and standards in that area. And we're seeing improvements in the ISSB coming to Montreal will help corporations have a standard-based approach to looking at sustainability metrics. I think artificial intelligence and the advent of generative AI like ChatGPT and others will provide better tools, help us better analyze information and do it faster than ever before. I didn't coin this phrase, but someone Brian said that AI is not going to steal your job. Someone using AI could steal your job. And I think, AI and ChatGPT will be good tools to help us automate certain functions that are less critical and really allow people to focus on the critical part of their process, the analysis, making sure that they have the right data in the right format. And I think that, those improvements, that progress has been part of my entire career. When I started, I was receiving faxes. Now email came in and the internet came in, and it just allowed you to do everything better, faster, but you still had to follow the same process, still had to make, the right decisions based on the right information. And I think, the young people we have today, they can program, they can, add the tools more quickly to the process they're doing. And I think that, will allow new people in the industry to probably exceed what we do. But what they need to learn is to make sure that they have a very well-disciplined process. And that's what we're teaching the people here at NBI. We're making sure that, when I leave NBI and the investment business, well, those processes are going to stay there in place. Because they'll be part of the culture, they'll be part of the approach, and they'll have proven over time to bring value to our customers.
Terry, could you share any planned enhancements to the framework that could offer even greater governance and risk management in the future?
Well, part of the OP4 process is qualitative. What are we looking for and asking the right questions? But we're always trying to improve the quantitative side to really give us better information, proof points that every part of the OP4 Plus process is being followed. And so, the process itself will not change. And I think I've repeated this many times. You have to have a disciplined process, but how we go about finding the right information and making sure we have the right metrics. We're trying to improve on that all the time. One area we continue to work on is making sure that we have the right factor analysis. If a PM is more value-based, and are we looking at the PM in the right lens, with the right data, with the right comparison, to make sure that they're delivering what they told us they were, with independent metrics to prove it. We also want to, improve risk management, make sure that we can have red flags pop up more quickly, make sure that we can react more quickly. And so really making sure we have the right risk metrics without being inundated in too many of them, so we can really pinpoint the right areas is important. We want to retain that flexibility. You don't want a bureaucratic process. You want just the right amount of metrics to follow everything, but that allows you to be disciplined and react in the right time frame. It's finding that right balance that is important, and we'll always look to improve the quality of the output of our analysis to make sure we always find the best PNs for every single asset class.
Terry, it's been an amazing conversation. I want to thank you so much for your incredibly valuable time and insight. The OP4 Plus framework is actually, discussing it has really provided a fascinating look at your process. And so, Terry, thank you so much for your incredibly valuable time and insight.
Pierre, thank you very much. It was a pleasure to chat with you, and look forward to chatting with you again in the future.
Yes, likewise. Thank you so much.